is Thursday, November 14th. I forgot which day it was, but I'm going to get this out of the way. I bought more IBIT at like 6 o'clock this morning. I didn't buy it in my Webull account. I was sitting there on my phone doing some research for the show, and I bought IBIT. I'll just get it out of the way. I won't tell you how much, but I continued to add to my position. I did it in Fidelity. I did it after hours. I'm contemplating a strategy where I just, at the end of the week, I put in $100 a week into something like IBIT, because I do believe that Bitcoin is here to stay. It's kind of like almost a gold thing. And I do think that you should be continually adding to it. It's in the core portfolio now. If you go over to Linktree and you go Savvy Trader, follow my trades, you'll be taken to the core portfolio. It is in there. IBIT is in there. We can look at total. It is up. Let's see. Since I bought it, I think the other day, it's not going to be up a lot. Where is IBIT? I'm looking for it. Let's see. I just saw it. It is down 2%. So it's down 2% since I bought it. Part of the point is, hey, it is just, it's Bitcoin. You need exposure to it. Let's talk about the Qs. Because the Qs are seeing you trading sideways. You're not up at the upper end of the Bollinger Band, but you're still holding on to that 9-day. But that MACD, it's gotten up to the place where it turned down before. And so you can see, look at this little portion right here. I'm going to highlight this, okay? Oh, come on. Get out of there. I don't like when I grab the chart like that. But we're going to highlight this, okay? That little point right there. See how when I go on the MACD right there, how the MACD started curling and going down? This is a 4-hour chart. So it's not a long-term chart. This is a 4-hour chart. It's not a daily. It's a 4-hour, 2 candles per day. It started going down. Well, where are we on the MACD right now? It's curling down on the signal. So it's very similar to that, very similar to the last few times that it's gotten this. And then the market took a downturn. Do I expect this market to go down a lot? No. Do I expect it maybe to pull back to, the 512? Maybe. I mean, I'm going to remove that rectangle. Just that was for purposes. But again, I think that a healthy pullback would be normal. Do I expect it to go down below 500? No. But if it does, you should be buying. Honest to God, you should be buying. Because where are we on the CNN Fear and Greed Index? And wow, that is bright on my face. But the CNN Fear and Greed Index, you can just Google this. And you should keep an eye on this. It's at 7. Okay, 7, Fear and Greed Index. It's not super high. You can go to extreme greed. So does this mean that we're automatically pulling back? No. The other thing that you want to watch when we're at these all-time highs is the VIX. The VIX is at 14. It likes to live at 20. When the VIX spikes, the market typically will go down. That's volatility. So though between the chart on the Qs, the Fear and Greed Index, and the VIX, you could pretty much tell, okay, we're overextended. You don't want to buy things. That's very simple. Just an overview of the market. It's nice and simple. And again, you should have a chart program. I got a great letter from Mike last night. He signed up for Trendspider this past weekend. He emailed me for my algorithms, and he wrote, years ago, I took my kid to Rose Holman, and at the end of the tour, they gathered up in the auditorium and gave a presentation that stuck with me ever since. The speaker told us over the past 5 years, 92% of the graduating class had either landed a job or gone on to graduate school by the time they left. They mentioned one student without a job who was lined up for 3 interviews the next day, and they were personally going to escort him to those interviews. The message was loud and clear. We're going to teach your kids, and they're going to leave here with job-making money, whether they like it or not. I thought of that experience when I signed up for Trendspider this past weekend. I didn't dive in immediately, but the next day I received 4 emails, one from the CEO. The CEO is Dan Ushman, welcoming me or encouraging me to start and offering me support. It reminded me of that Rose Holman pitch. We're going to teach you, and you're going to start making money right off the gate. I'm attaching the welcome letter just so you know. I'd appreciate getting those algorithms from you. Mike, perfectly worded. The reason that I use Trendspider and the reason I push Trendspider is because they are a small company that wants you to use this service. It is by far the most robust charting service out there. I love this program. I was a paying customer before I was an affiliate. Now they're having a Black Friday sale. That's why Mike signed up. So you have 3 tiers. You have the standard, you have the advanced, and you have the advanced. Enhanced and advanced. The advanced is going to give you unlimited one-on-one training, okay? You can sign up and you can get a product expert to give you a course a week, a course a day. It's unlimited, okay? They're going to teach you on the platform. Enhanced comes with one-on-one session. So if you don't really know what you're doing, you don't know how to set it up, that enhanced program, and you just need one session and you're going to go and learn technicals on your own, that's fantastic. Now, if you know everything and you've been a trader before, save your money and sign up for standard. But the dollar amount that we're talking about, okay, you go from $45 for the standard, and that $545, that's not a lot for the tools that you get. Honestly, that is a savings, a huge savings. It's usually $642 for the year. Okay, huge savings, $45 a month. Enhanced for $4 more a month. $4 more a month. You get that initial free one-on-one training. You also get more alerts. And as you start trading more stocks, and as you get more stocks in your portfolio, as you get more stocks in your watch list, you want alerts. And then the final tier is advanced. Okay, that's $15 more a month. You get unlimited one-on-one training. So if you're going to do one training per month for $15, go and find a teacher, a piano teacher, a language teacher that will charge you $15 a month for one session, or $15 a week, however often you're going to do it, because it's unlimited one-on-one training. So I would urge you, Mike's letter just tells me that yes, the message that Dan has sent me is that they want to teach you. Do not miss out on this offer. There are only 3 days left in this offer. Then the price goes up. So again, Trendspider, it is my preferred tool. I actually love this tool. They had a presentation yesterday. This is on their YouTube channel. I will include this in the newsletter. Avoid post-election volatility with CANSLIM. Now, let me see if this says what CANSLIM is. I think we can read about CANSLIM here. So CANSLIM, what is CANSLIM? I'll include this too. C, 25% year-over-year earnings per share growth. A, 25% year-over-year earnings per share growth in at least one quarter a year for the 3 years in a row. And price is currently within 15% of the 52-week high as average monthly volume. You get the deal. This is this was developed by William, I forget the dude's name, developed by William O'Neill back in the 50s. And it is followed by many, many Wall Street professional traders. So Jason goes over it, how you use it in this video. If you are a Trendspider subscriber, this is what's great, is you go right here and you go log in and import, and you can import the small cap view. And then they've also done NYSE. You can do the large cap view. Okay. Between those two scans, he went over, okay, how do you whittle this down? And he goes over everything, including this relative performance indicator that they have. And this was the best tool. And he didn't go, oh my God, you're going to make money on this one. But he whittled it down to 2 or 3 particular stocks. And he gave you the reason why. He didn't use another tool other than Trendspider. Okay, that's the only tool he used. Now, these guys are professional technical traders. They love the technicals. They have started including the fundamentals into the charts so that you can look at PE, you can look at some of the PEG ratios, you can look at those things. But again, that's what Trendspider does. And between the video, the actual description of CANSLIM, and then importing all of this, and then reading about relative performance. Unbelievable. Just another reason why you should sign up for Trendspider. I love this tool. Again, I can't tell you how much I love that tool. But if you are a Trendspider subscriber, when you go to the newsletter today, and the newsletter is free. Remember, the newsletter is 100% free, and these imports are free if you have Trendspider. But when you go to the newsletter today, I'll post it later. You will be able to import all of that CANSLIM stuff, watch Jason's video, and go along with him on the ride with CANSLIM. So my biggest movers yesterday, it was interesting, and we'll go over this. My biggest movers yesterday was snow. And so let's take a look at Snowflake, because this has been one that I think people have just missed. Hey, it's down here. It's not popping up to 200 like you said it would. But when we go and look at the weekly, we've regained this 130 level that was down here in this portion. So we've regained it. The 50-day still moving negative. On the weekly. The 200-day just started to appear. And yes, it's moving negative. Not great, but I think the company is moving towards a solid fundamental stage, and I think they will do well. Now, do I think this one's moving money? No. I'm still in this at about 170. Have I cut it? No. I don't need the capital. It's sitting there. It's like $5,000. It's not much to me. When I need the capital, I may sell it for a loss. It's in a retirement account. So it's just sitting there. It literally is just sitting there. As we start to turn, there might be an opportunity for me to add to this. Now, the algorithm got you in here at 119. You've been trading at the top of the Bollinger Bands ever since you crossed this 200-day. You haven't crossed the 200-day in quite a while on this 4-hour. The last time you did was here at 161. We popped all the way up to 233. So this one might be interesting. Again, it was my biggest mover yesterday. I took a look at the chart and I said, okay, this is one that I want to look at. Now, what was more interesting to me were my three biggest losers. It was Powell, just profit taking. This one is an alpha pick. It's up huge. It's up enormously. And we'll look at Powell. So if you're not watching the live, I had to take care of something really quick. So there's a break there, but we're going to go into my three biggest losers. Powell, this is just profit taking. This is 100% profit taking. It's an alpha pick. It's up huge. Let's go to a weekly chart. You don't think that that's just profit taking when, you look at this week and you're down 12%? That's just profit taking. You're trading up there. So I'm not worried about this one. Another big loser of mine, Mara. This is just, hey, the earnings came in. They popped on earnings, just kind of coming back to reality. Any reaction in the market is an overreaction. Now, one that got me, got a lot of attention in the private Facebook group is ZETA, tomato, Twitter, X, whatever you want to call it. But this one, the algorithm has you in here at 27. You traded down to 17 yesterday. You closed at 17.74. This is an alpha pick. So I want to be very clear about alpha picks. There was a reason that 2 weeks ago, if you're new, I wound up buying the Alpha Picks portfolio rather than going and picking winners and losers out of that portfolio. I just bought the entire portfolio. You can go and watch it on YouTube. You can go and read the newsletter about it. You can see how I did it. But this is an alpha pick, and they reported great earnings, and then a short report came out, and that's what took this down. What's crazy about this is that the comment section in Alpha Picks, if you're an Alpha Picks subscriber, just go over to Alpha Picks, okay? And then choose ZETA and look at the comment section in that. It is vicious against Steve Cross. And I find it incredibly horrifying that these people who are investing group leaders hate Steve Cross. They shout about GCT. They shout about SMCI. And now you have a short on ZETA. Here's the thing. The entire portfolio, I bought $50,000 worth of the portfolio, which is not a minor amount to most people. That is a major amount of investment to put to most people. But I would argue that Alpha Picks portfolio, which is up 183% versus the S&P at 58% during that time, I would argue the Alpha Picks portfolio deserves that amount of money. If you're listening to me, You're not making 183%. I can guarantee you that if you're making that, you're doing some moves outside of this podcast. And that's what Alpha Picks is. It's a portfolio of names that I would never pick myself. And ZETA is one of them. It was a recent Alpha Pick. I think it was August, if I'm not mistaken. So what Alpha Picks is a rules-based portfolio. You get a pick on the 1st and you get a pick on the 15th. They're not adding to a pick unless for some reason it winds up being another Alpha Pick on the 1st or the 15th. This is not a managed portfolio. It's a rules-based portfolio. So a lot of these people in the comment section, they're doing what I was doing, which is going and picking some of the stocks and winners and then overweighting themselves. So the portfolio, it's a very managed portfolio with rules based. If you get a sell email, then you sell. If you get a buy email, then you buy. And you can pick and choose what you want. But that's the great thing about Alpha Picks. On my $50,000 investment, it was $750 that I bought of ZETA. Okay? As of yesterday, I was down $248. That's 0.49% of the entire, not 49%, 0.49% of the entire portfolio that I lost. The overall portfolio since I bought on October 25th is up 10%. 0.4% is barely a rounding error. It's barely a rounding error. Okay, I point to, and the reason I do this is because in our Facebook group, and you can go over here and you can go to the Facebook group, the Facebook logo on Linktree, it takes you to the private Facebook group. Okay. And I posted a bunch. There were a bunch of other people who were asking about it yesterday. Melissa posted about Shopify, and everybody started like worrying about ZETA. I posted it yesterday. I said, you don't do a thing. If you're in Alpha Picks, you don't do a thing. You wait for Steve Kress to tell us what to do, because the team will tell you when it's time to sell. Okay, and you want to sign up for Alpha Picks? It's right here. You have two choices. You can sign up for the bundle, which is what I suggest, because we'll go over how to set up Seeking Alpha Premium with Alpha Picks. The bundle, you save $159. And if you want Alpha Picks, you save $50 off of that. And it's all here on Linktree. The second one is bundle. And the fourth one is Alpha Picks alone. The third one is Seeking Alpha Premium. We'll go over that. But what happened in the meantime? Overnight, ZETA announces a $100 million buyback. And they're up. They're up in pre-market. It's up 6% in pre-market. Okay, they announced a buyback. Now, there are some, ZETA Global downgraded by KeyBank as short-term short thesis gaining traction. Yeah, it was down 50% yesterday. I'm waiting for an email from Alpha Picks to tell me, but it's a rules-based portfolio. It is not a portfolio that reacts to catalysts. So I would argue that yes, and by the way, just so everybody, and I'm going to post this in the newsletter. I didn't post this online, but I will post the actual screenshot of my portfolio. So on the 1st of this month, they said to buy one stock, and you're supposed to buy 1% of the portfolio. So every time they add a stock, I'm going to buy $500 because that was the original one. Now, as the portfolio grows, I may buy more than $500. Say it gets to $60,000, I may buy $600. So, but as the portfolio grows in there, I'm going to start adding more. Now, I made a fat finger mistake on the 1st of this month. We're going to get another pick tomorrow. But on the 1st of this month, they picked a stock. Okay? I can't tell you what that stock is, but you will see it in the newsletter today. So sign up for the newsletter. But I made a mistake of buying $5,000 worth of that stock. What's interesting is I am up 11% on that position. 11%. Okay? That just paid for Alpha Picks for the year. That just paid for Alpha Picks for the year. Just that mistake paid for Alpha Picks for the year. And that's just in what? 14 days I paid for Alpha Picks. Now, not everybody has $5,000 that they can fat finger, blah, blah, blah. I understand that. It was a mistake. It is what it is. But I just want to point out that $449 or the $600 that you pay for the bundle, it is not a crazy amount with the amounts that we're talking about if you appropriate the right fit. And again, if you wanted an education and you don't exactly know what you're doing with fundamentals, that's where Alpha Picks comes in. I mean, shit, they picked Sprouts Farmers Market. I shop there all the time. I never thought of buying this stock. That thing's up like 300% since they picked it. So ZETA, I would wait for, if you're worried about it, I would just wait. I would just wait for what Steve Kress says. They have managed that portfolio spectacularly, and that's how I'm playing it. You can play it how you want. If you've bought ZETA, I'm not going to tell you to buy the dip because I don't know what that short report means. And the algorithm got you out yesterday with a 36% loss. Buying and holding this stock over 24 months, you're up 211%. That 36% loss, the algorithm lost you. You're down 13% with that buy. I would argue that more than likely you just continue to hold it. But a stock that's up 200% year to date, look at that thing take off. You don't even have a 200-day on this weekly chart. And it was trading at the top of the Bollinger Bands on the weekly. That was extended. So do you want to buy the dip? Hey, buying this stock at the 50-day has always been good. But it only goes back to 2021. But the 50-day, once it loves hanging out at that 50-day. The Bollinger Band's probably going to contract a little bit. So you do you, boo. That's what I say. But ZETA, that's the explanation on ZETA. Now, top 10 quant stocks of 2024. You just want Seeking Alpha Premium instead of Alpha Picks. You want to find your own. The top 10 quant stocks of 2024 are up over 120%. You just want to set up your portfolio of the top stocks at the beginning of the year. You're up 120%. Again, the top 10 quant stocks. That points to the quant. You want to go and look at, Abercrombie. Let's look at App Lovin'. This is a high flyer. When did this one, it's a hold right now. When did it go to a strong buy? It was a buy here, and then it went to a strong buy. Looks like we're going to go to a change buy. There's a bunch of strong buys down here, but it was at 45 when it was a buy, and as it got to 60, it was a buy, and then it got up here, and it was a strong buy for a slight bit at 130. Even though the valuation, you're trading at $283. Okay, This is not like, okay, the beginning of the year. This is a strong buy on 9/30/2024. $130. You've doubled your money. You've doubled your money. The quant is very, very good. Now, it says it's a hold right now, but I would argue that Wall Street has a 17% downside on it. I would argue any dip in this you buy. Any dip in that one you buy. But again, the top quant stocks, and say you say, oh, quant stocks? Well, what do I care about the quant? Well, take the top 10 market cap stocks on Wall Street. Rank them by the Seeking Alpha Quant. Large cap stocks, you guys know I'm a large cap investor. Take the top 10. And then what did Jim Cramer do? I mean, we're talking about 10 stocks. Jim Cramer last night went over 10 stocks that year to date are up 200%. Rocket Lab, Kava, Palantir, Powell, which is an Alpha Pick, Vistra, which is the top S&P stock, Carvana, AST Space Mobile, that actually declares that has their earnings today after the bell, MicroStrategy, App Lovin', we just went over that one, NewScale. So he went over this. I think it's a good video to watch. Whatever, number one rule of the podcast is don't listen to a douche on the internet. Number two is don't listen to Jim Cramer, but it doesn't mean that Jim Cramer is not an extremely smart person. Now, it's 13F filing season. Ray Dalio of Bridgewater. I thought this was the first one that I saw this morning. There's a bunch of 13F filings. So go and read them if you want to follow these guys. But I thought this particular one was interesting because Bridgewater, the hedge fund founded by Ray Dalio, they reduced their position in in NVIDIA, Amazon, Meta, and Microsoft. Interesting, because I would say Amazon increase, Meta increase, Microsoft increase, NVIDIA increase. I would go against all of those, but they did reduce their positions. What they upped their position in, which makes me very, very happy. First is Apple. Next is LRCX. That is Lam Research. That is the one that just came crashing down, the Dutch company that creates semiconductor equipment. And nuclear, CEG, Constellation. And they got out of a few, including Micron and Baba, and then they added new positions in the fund exit. I'm sorry, they exited positions in Disney, Thermo Fisher, and Tractor Supply. I thought that article was interesting. Now, let's take a look at NVIDIA in the quant. We're going to take a look at this because people were telling me about, hey, how did you know that NVIDIA got upgraded? Well, it's because on the left-hand side of my screen, you'll see there's the core portfolio. And when you set up a portfolio, we're going to talk about how to set up your Seeking Alpha right now to actually make yourself more organized so that you get these alerts. So one, you could just set an alert up here. Okay, you can just set an alert up there, hit a new alert, and then you can do it on a rating. And you can do it on the quant, Seeking Alpha Analyst, or Wall Street. And you can do it on an upgrade. You can select which rating you want, or you can go up. Okay, that's what, if the rating is what you want, you can set up that rating and you can do it. But I would argue the better way than doing it on every freaking stock in your portfolio is just to create a portfolio. So you can create multiple portfolios in Seeking Alpha. Eli did this yesterday, and I went over it yesterday for the paid members of the newsletter. He put it out there. Hey, I researched all the crypto stuff on AI, and then I set up a portfolio in Seeking Alpha. So now I get an email every morning when they change ratings on the quant. When there's news about a particular stock in your portfolio, you get a list. It's an email every morning that you get. It's a summary. Okay, so you can do that. Say you have alpha picks and you want to manage it where you just get an alert, in the morning when an alpha pick actually changes from a strong buy to a hold, because that's the way you want to trade alpha picks. You don't need to do the entire portfolio. You could get out of stocks when they go to a hold. Remember, it's a rules-based portfolio. When it goes to a hold, it has to sit there for a certain amount of time for it to get pulled out of alpha picks. But the reality of it is, if you're not comfortable holding something that's in the quant as a hold, then you can get rid of it. Set it up as a portfolio, your alpha picks. I specifically like what Eli did, which is taking all the tools. He's taking Seeking Alpha picks. He's taking AI. He's looking at crypto. He put it into Seeking Alpha as a portfolio. He exported that portfolio and then imported the portfolio into Trendspider so he can scan against it every day and get an email from Trendspider that says, hey, here's the ones that look bullish in the morning. So again, it's how you use all these tools. It's how you put them all together. I really like how Eli did that. But again, you can do all of this in Seeking Alpha. And NVIDIA, it moved to a hold. Now it moved back to a hold. You can see every now and then it hits a strong buy. Right there on 611, it hit a strong buy at 120. Did you buy? Right now, it just hit a strong buy at 148. It moved back to a hold. It moved back to a hold. So just be aware of that. Now, for every degenerate out there, Robinhood added Solana, Cardano, 2 other cryptos to it. And I thought this was interesting because I started seeing freaking frogs all over my screen. And I wanted to point out, you can look up Peppy Coin in Seeking Alpha, and you can track this. Okay, this is Peppy Coin. It is up 18%. It was up 70% yesterday when they added it. Dogecoin is up 140%. Dogecoin to US dollar. You can look at that. Look at that pump. Okay? It's up 3% right now. So again, you can look at all the degenerate stuff. It's in here. Oh, and by the way, this guy who's the VanEck CEO says Bitcoin, I've been on to spaces with this guy, says Bitcoin will go to $350,000. How does he get to that? He basically uses the market cap of gold. That's it. And he says, hey, gold is at this point, you're not even 9% of that. I think he put it in that 9%. Go and watch the video. It's a minute 35. You have a minute 35. If you're investing in this stuff, go and look at it. Okay? This is why I like Seeking Alpha too. I was looking at, why am I bullish on Bitcoin? Look at all the analysts here. I mean, this is just yesterday, the analysis. Bitcoin rally. The tulips have done it again. He's saying, hey, it's going to go. Fed's Kashikari, once a Bitcoin skeptic, now says he'll have an open mind. Bitcoin's bull run on-chain data signals new demand 100K in sight. Behind Bitcoin's post-election rally, as Bitcoin races towards 100,000, it's well off historic overbought lows. And we can go and look at Bitcoin to US dollar. We can go and look at BTC versus US dollar. And we can go and look at the summary right here. Okay, this is where you get it. It's down 1%. You're trading at 90,000. I would argue, I don't think it's done. So I did buy more IBIT. And we can go and look at the IBIT chart. I may be buying at a time where it's going to pull back. I don't care. It wasn't an enormous buy. I think it was $5,000. I bought 100 shares of this at about $51. And you're trading at $51.70 right now. So I bought it. I bought it at the top of the Bollinger Band. I don't mind. I'm going to dollar cost my average my way into this because I want more exposure. I do think that 100,000 is in this. I think Trump wants to be known as the Bitcoin president. And I think that's very simple. Now, you may be in MicroStrategy, you may be in MSTX. This is an interesting article. I am not listening to this dude. He says that the valuation of MicroStrategy is actually $107. MicroStrategy is trading at $337. He's saying it's because of taxation, blah, blah, blah. It's not your taxation. It's MicroStrategy's taxation. They're never selling their Bitcoin. They're raising dollars through getting funding. They're leveraging that Bitcoin, and they're just getting leverage on Bitcoin. I think he misses the entire point of what Michael Saylor's doing, but I thought it was an interesting stock. Now, what he says is just go buy IBIT. And you can read the entire article if you want. I thought it was interesting, but he does say he's not a Bitcoin bear, but he does say just go buy IBIT. Disney beats inline top expectations. Pretty good. I went over it this weekend, and I've said before, buying under $100, you're going to be guaranteed that this one goes over 100. You can't have Disney under 100. It's not going to get beaten down. And you can see that red line right there. That's off of a weekly downturn, okay? That's a trend line where it provided resistance on this downturn. It pulled back up. It hit the trend line, okay? Then we saw this huge downturn all the way till October 2023. Again, in March of this year, it just when they were going against Nelson Peltz and Iger through the kitchen sink, it bounced off of this trend line. Now, where are you on this trend line right now? The trend line's at 106. You're trading at 112. So let's determine where you might go. Because the last earnings, you had a gap from 116 to 108. You're trading at 112. You're in the middle of this gap. Okay, the earnings were very clear. They were good. They beat top line estimates and initiated full year 2025 and beyond outlook. That's something they weren't doing before. So I like Disney. I like it to get to 120. And I've said this before. I think you get to that 120 mark. If you break that 120 mark, I think you go back to that 153. It's a good long-term buy and hold. The algorithm, over 24 months, it has 32 positions. It is hugely volatile. It makes you 11% though. If you just bought it 24 months ago, you're up 1.16%. You should be buying and adding to this position. I like this company. I think they are due for a buyout. I think Netflix might buy them. I think Apple, the company's market cap is a rounding error to Apple, but they don't want to take on the ESPN stuff. But they're actually doing really good with ESPN Bet and stuff. Now, biggest movers today include Cisco. And we can go down here to Cisco. Cisco shares fell 3% Thursday morning. We can go over this chart because it was very clear that Cisco had popped before earnings. And when you look at this one right here, $58 line, when you look at this and you go and look at a weekly, what do you see? You see that pullback once, twice, 3 times, 4 times, and now 5 times. It was dangerous to buy this one down below. You see the MACD is extended. You see the RSI is extended. I would argue it was inevitable that this one would be down. It was inevitable. Now, we talked about ZETA Holdings already. ZETA shares jumped 19% after 37% drop in the prior session. So, ZETA is up 7% in the pre-market. CNH, which is this one, Greenlight, David Einhorn's, it's a European agricultural company, a tractor company. I don't know. If you're interested in that, you can read about it too. So let's talk about social requests because I've got a couple. Peter he signed up for Trendspider. I sent him his algorithms. I'm curious about your take on Disney as a swing trade. Seems to have broken out of an ascending triangle pattern with a recent MACD cross up, but looks kind of overbought. I don't think Disney, let me see if it looks overbought. I don't think it is a little bit overbought in yesterday, but I think you can see right here where it was overbought on their earnings back here. I think you take this overbought with a grain of salt, because when you go to the weekly, it's only at what, 59? That's not super overbought. And the 50-day has been going positive. So I probably, again, on the weekend, I said this was a good bet. Disney's just one of those. It's not a Boeing. It's not a broken company. It's just it's lost its way. But I think Iger's getting its back on its way. So I think Disney's a good long-term play. I wish you would have bought it under 100, Peter, but that's kind of where I'm at. I don't own Disney. I don't go to Disney World, but freaking everybody with kids, they're on freaking, social media posting about going to Disney World, and they're paying thousands and thousands of dollars. So it's one of those that might stay. Noah, would love your advice on ZETA getting killed the last couple of days. Do I get rid of my position with a 5% loss? Noah, I went over it specifically. I am playing that one with Alpha Picks. Alpha Picks is a long-term buy and hold. I don't care that it's down. I will wait for them to get out. Do you get out? That's a personal decision. Do you get out with a 5% loss? I don't think so. Again, the short report is what it is. With a company saying, hey, we're going to buy back $100 million of share overnight, I think they're saying that the short report's full of shit. Does the company always have $100 million sitting around to buy back the shares? Or do they think, hey, this pullback, it's a reaction in the market that isn't overreaction? That's exactly what I would do. And I told him from the Facebook group, I am sure Alpha Picks will address it. They are fantastic about sending out updates. You're talking about a stock that's up 200% year to date, and a complaint about an 8 to 10% drop. That might just be taking profits, as ESPN says. Come on, man. But that was when it was down 8%. It wound up down 50%. So, and FYI about the position 2, I just said, hey, I'm managing it as part of that. So Spotify. Carlos wants me to look at Honest Company. Carlos, you wound up in Span, to be honest with you. Dude, you got to give me something more than just a symbol. Because Honest Company, I know nothing about. But tell me why you want it. Do you just want me to say, hey, buy it? Trade it. The algorithm makes you 71%. Okay? Buying and holding makes you 77%. You win 30% of the time. That tells me super volatile. Look at this run that you had back here in October of 2023. 137% gain. Now, when we go and look at a weekly, you don't have a 200-day, but your 50 days moving positive. You're trading on the upper end of the Bollinger Band. This week alone, you're up 25% in this stock. I think it's earnings related, but we can go look at it a little bit. I think the quant has this one, to be honest, as a buy. Yeah. So the valuation, they're not making money. The growth, 9% revenue growth year over year. Great. Profitability, 36% gross profit margin. They're not using their cash very well. Momentum, you can't beat it. Revisions, there's 2 analysts that cover this. I mean, you got to tell me why you like this, Carlos, because there's 8 analysts. They're up. Their price target is 625. You're trading at 645 in pre-market. You got to tell me why you like it, because for me, I think there's better places than a personal care product company. Unilever is the number one in the quant. Odd, Unilever, both of them PLC. So, but honest, I'd trade it. To be honest, it's not in my wheelhouse, but I don't know what your wheelhouse is, what your portfolio is. But if you wanted it, go and trade it. Rizzy Bobby, great show today. My buddy and I loaded the boat on two favorite degenerate stocks, IONQ and Rocket Labs, and we both reached 100% total return. That is fantastic, Rizzy. Kraken Robotics is the next up in space here. Let's look at Kraken. Kraken Robotics. It's KR and KNF. This is an over-the-counter stock. Be careful. That's all I would say. I mean, that's a crazy, crazy move. I think most robotic stuff is going crazy. I think that's good. But I'd be a little bit careful of that one, to be honest with you. From Facebook, Justin. Hi, Gary. Thanks for all you do. I tell everyone who listens not to only hit the 5 stars. And yes, if you're listening on Spotify, just hit the 5 stars. I've been trying to figure out a good entry for Credelio, I think this one is. Credo Technologies. It's a buy and a strong buy in the quant, but it's at all-time highs. Always makes me a bit nervous. I'd be interested to hear your take. Okay, so here, Credo Services. Let's look at a weekly. We don't have a 200-day, so it's new. You're trading at the upper end of the Bollinger Band. You are extended on your MACD. Your RSI is at 68, so yes, it's extended. Now, over the last 24 months, the algorithm makes you 181%, versus 243% buying and holding. You win 39% of the time. I would say most of those wins look like it's around the 200-day on the 4-hour. Remember, on the weekly, you don't have a 200-day yet, but everything's moving positive. I would say there's 2 things that I would look for here. The first is I would look for something around the 200-day. Okay, you have earnings coming up. I don't know what the earnings would be for this one, but I would trade this as a technical one because if I'm actually looking at this one, I don't even know what they do. Credo, let's see what they do. They are a information semiconductor company. So it's got a 7.6 billion. As far as semiconductors goes, I just buy NVIDIA. Honest to God, I just buy NVIDIA. Let's see, are they making money? They are. You're paying 129 forward earnings, which is crazy, but the growth is good. Now, the momentum, which is the really, really important part, that's good as well. Revisions, B-. There's some people that are taking this down. When you look at Wall Street, what does Wall Street say on it? 12 analysts say it's a $37 price target, which is 18% down. Doesn't mean it can't still go up, but I would argue you want it around the 200-day, and you want to trade this around the 4-hour algorithm. The 4-hour algorithm makes you 181%. You can't argue with that. It's a 39% win rate, but it seems to get you out in time to avoid those enormous losses. Your max drawdown, 59%. So you did have one drawdown where it was 59%. I don't know where that one is. Let's see if we can find it. Because it was probably, it was earnings related right there. It was earnings related. So again, I would probably do that. I would, if you're having trouble finding an entry for something, always find a technical strategy to find an entry, or you just dollar cost average if you believe it. Jeff from Facebook. Hey, Gary, love the pod. Appreciate the work that you do. Curious to hear your thoughts on RMTI. Seems like earnings were solid and the stock tanked. Also strong buy in the quant. RMTI. You guys come up with these stocks. Rockwell Medical. Let's pull this back so we can see it. Ooh, that's a high flyer. You're up 77. I mean, RMTI. If you got into this one, let's look at the year-to-date gain, because the year-to-date gain, you're up 39%. 1 year, you're up 33%. The valuation is crazy because they're not making money. That's the key. And their growth, great, 22%. Profitability, fantastic. Momentum, great. Revisions, not good. 2 down. Let's see what Wall Street says about it, because Wall Street has probably 1 analyst, 2 analysts, and they say it's $7.50. So I don't know what interests you in this one. The algorithm makes you 221%. It has you out right here. It makes you 193% if you buy and hold. You have a 41%. So in my mind, I'd trade this one. It's not making money. You don't have a long-term great chart. You're seeing it hit right up against that 200-day, and you're seeing it pump on certain times. Look at the volume pump. So I honestly, Jeff, I would trade it. I wouldn't buy and hold into a stock that has a long-term chart, a weekly chart that's upper left to bottom right. You want that 50-day to start turning around, and it has, but the 200-day hasn't started to turn. So until that turns, I'd trade it. Now, Scans, Datadog, Lulu, Dollar Tree, Mondelez, and DR Horton. And there's a couple leveraged ETFs. Remember, Trendspider's on sale. Bundle up. And if you want more explanation on organizing yourself and seeking alpha, let me know. Maybe I'll do a special video of just setting up a portfolio and making sure that you get the emails every day and things of that sort. It is very simple, but I would argue that you want two tools, okay? There is Trendspider, which again is having a Black Friday sale, and then you get the bundle because that comes with premium and alpha picks. Everything that you need are in those two services. And if you price it right, you can get it for usually under $1,000, okay? It's a little bit over right now, but you can usually get it on sale for under $1,000. So if you have any questions, hit me up. That's me. I will see you guys tomorrow. Take care. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together